Good afternoon. Time to wrap it up for the last trading day of November the 28th, 2014. Started out this morning with the idea that the market would close at 26,750 or higher. As recently as the last update at 11 o'clock, I thought the market get a little profit taking, but spike up on a close, and that's not what happened. So again, this once again just proves that I have ideas. We are discretionary traders, but they're not always right. You do have to trade what you see. So this morning we started out wanting to sell failure to take out 73. We had a decision to make. We get our setup finally. It takes a long time to develop right here. You're short in the 72 area. You've got a decision to make right here at the mean green line. It's a profitable trade. Software tells you to sell it. Market breaks. Software tells you to sell it. Market breaks. And then right here into consolidation. The low, they got stops below 65, and I think the official close for the day session looks like it's going to be in the 65.50 area. 65.66. So the 267.50 was wrong. Looked fairly close, and that's what we have now. This dump into the close, you got to know that crude stocks are selling, oil service sector stocks are selling, sovereign debt that's based on oil is selling, domestic debt 50-60 cents on the dollar. Probably less than that right now. In this past month, it's been 70 cents on the dollar for companies that are refinancing. They're in the fracking business. Caterpillar's down. All drilling, all oil field service companies are going to be down. That's a big part of the S&P 500. There's a lot of cap right there. So this will impact the stock market. Stocks that are up today, as you would naturally think they might be, are retail stocks because of Black Friday and the releases that will come over the weekend as they tally the amount of money spent. A lower price in oil is good for our overall broad economy. It's the second largest input to anybody's cost structure, the cost of energy. Interest rates, even for us as retailers, interest rates on car loans, interest rate on our rates on our houses is our number one input, our number one cost. The next cost, utilities. Gasoline, diesel fuel for cars and trucks would be the second biggest. So it's the same for us too. Airline stocks are soaring because the price, which is at least a third of their operating expenses, and sometimes it can be just under 50% depending on how the price of oil moves, but definitely a third of their expenses, they are soaring. So some parts of the economy are helped by the price of crude oil coming down. Some parts of the economy are not. So it's generally speaking, lower energy prices over time are a boost to the economy. And we've seen it in natural gas as foundry industries are coming back onshore, as chemical industries are coming and plastics companies are coming back onshore because the source of their materials is cheaper. So this morning we had a 65, 67 buy down in this area right here, 65 plus or minus. It hoped to buy 66 or better. You could have been long at 69, and with a great deal of patience, you could have just made 3 points on your trade. Didn't happen quickly. Look at the volume right here. This is considerably below. Very, very slow to develop. Getting short here, getting short there, finally getting short up here produced a great big trade, and this would have been a winner. And we wanted to sell failure to take out and hold 73, 75. So the sell side held up. What does this type of selling mean on Monday? Probably more selling would be my guess, buffered by the retail sales information that came in. So that's where we are. Chuck, because some people have not switched over their price feeds to their brokerage firms, he said he will keep the price feed at Blue Water open for several more days till everybody gets transferred over. For those of you that the CME has changed all the rules. You have to get your price feed from your broker now, and that means you have to have an active account. Doesn't mean you have to trade it, it just means you have to have an account that's open. Well, that's what he's talking about, Chuck. So here we are. Here we sit. Looking at, that's for our day trade review, looking at our F1 screen. Lower high, lower low, retest support, and our lower come Monday. So this chart would have you a seller. Looking at the F2 screen. There, G period would be the start, lower, move out of the middle. Long term, the market has been trading higher. The key is going to be what does the Fed do? But, you know, based on fundamentals, again, there's been a lot of reasons all fall to sell the stock market. The Fed's card trumps every other card that's out there. So what will the Fed do if the selling starts? When profit taking, window dressing, locking stuff in, early part of December with a rally into December's close, typically has been what we face, where there's a little profit taking first 2 weeks in December, and then it rallies up close of the new year. Seasonals from Christmas to New Year's usually favor a higher stock market. Hard to say. There's just a lot of stuff that goes on. So where's our first sell right here? Our first sell is going to be 70 plus or minus. And then again, it's going to be 73.75. Like the easiest trade still, and it has been for the week, is to sell failure to take out 73.75. Where's the buy? We've been trying to buy 60s to 62, so I think we'll head a little bit lower. So buy one, 60, 62, and 55, 57. If it weren't for the Fed, we'd be looking for a place to sell it. I mean, it's just, it is that simple. But they print money. They're never held accountable. They can do pretty much what they want. And anytime the market has started to break, they've stepped up and bought it. Now, they don't mind the market selling some. We had a 7% correction before one of the Fed governors picked up the mic and said QE4 is a possibility, and the market rallied back and, you know, just topped out this week on new highs. And so when the selling takes off, if it gets to that fourth day of selling, we got to look for the Fed to come in and say something to stop the selling. Okay, looking at the note, the late strength came from weakness in the E-mini. We have closed the gap. It was at 27.03. Now taking out the recent high at 27.13 is where we are. You can see the gap is officially closed today. The strength, the late strength in the indexes, weakness in the indexes brought in buying in the financials. And you can see that we had volume-wise and TPO-wise a P, and we get a new move out of the middle in H period. The market is pointing up, but this gap that we talked about right here is now closed. And that's a tendency on the first couple of days of trading for that gap to be closed. The breakout came from 1.5, so 27 even is going to be pretty good support. ISM index is I'm going to make it 30 to 02 for buy one. ISM index is up on Money Manufacturing Index. That's probably going to be a reasonable number. And then 21 to 25 for buy two. The sell, and again, would really like to see what happens. We will adjust this. But for Globex, the overnight session in London, 7 to 11 and 15 to 19. If the E-mini is going to crash, really get some heavy selling on Monday, we do not want to be short the financials. Looking at the 30-year, the knob spread came in today on profit taking, end of the month, and that's probably what we should always expect. Just an accounting period, and that's how these guys get paid. So we had a pretty good day to the upside in the 10-year. This one was pretty compressed trading as profits were taken. The gap has not quite closed over here at 29, so again a structural sell will be this 29 to 01 area, then 7 to 11 if we get to there. And we don't want to be short this if the E-mini is trading down with some momentum. On the buy side, depending on the E-mini, I'd like to get it done closer to 16, but 17 to 21. Buy 1 and then buy 2 will make 9 to 13, and the 9 to 13 is more comfortable because of all the support that we have in here. But a lot's going to be dependent upon what the E-mini does. And the energy sector is a huge sector of the S&P 500. There's a lot of capitalization in that. But you got the airlines, you got retailers, you've got all sorts of stuff that will counter that to some extent. Okay, deflation is the argument on gold, countered by what happens if my government fails or does something or goes nuts printing money. So this is what gold looks like, and it is selling. It's going down with the price of crude oil. So 75, 70, perhaps 73, 75, sell 1. Our 80 to 82 will be sell 2. On the buy side, we've got a lot. The volume just dries up below 60, so we'll make 60, 62 buy 1. And then 55, 57. This is a very low volume area. We blew through it. Remember, we've been talking about gold getting down to 1085 to 1100. And I think that's still on the cards. Okay, crude has just been smacked. We're headed for a price below 60. We said on Wednesday that if OPEC did not bring in their production, that the price of crude oil was headed lower. They did not rein in their production. The price of crude oil is lower. It's not too difficult a call to make. We are headed to prices below 60, and because that is the expectancy, we might go deeper than that. So we got this new move. I'll do an F split that kind of came out of the middle. We'll work off of this trend lower. So the low that we had, 67.75, is a spot. Right here's at 50. So 50 to 75 is sell 1. 68 to 68 and a quarter, sell 2. I mean, on the buy side, 66, 66 and a quarter, somebody will cover their stops at 66. And then 65, 25 to 50. And I'm going to raise it a little bit. I'm pretty sure we're headed beneath that, but somebody might cover their shorts below 65. So very, very weak market, pointed lower. Just like we said this morning, it was an aggressive sell, but that's where resistance was. And if they won't let you get in at resistance, then that's the assurance you need to get in at a lower price. Stops below 65 before this round of selling is over. Okay, every currency around the world is lower against the dollar. The major currencies, the EU, the yen, the two biggies. and I don't anticipate that that will change. We got pretty good support at 24. Why is the market selling? Why is it coming lower? I mean, if you think about China's economic growth and the United States economic growth, we still have it. The EU is questionable once you get outside of Germany. Germany reported 0.1% economic growth. The Ukraine and Russia are starting to heat back up again for what that's worth. There's just a lot that could be put on the European Union, that extra added expenses that nobody's seen, plus the central bank wants it lower. So I'm pretty sure we're going to get stops beneath that. So we'll make 24, 24.10 buy one, and then 23.75 plus or minus buy two. On the sell side, 40 to 50, it is aggressive, but that's where resistance is. And then our 60 to 70 coming under 75 for sell two. Okay, we'll have to watch the news over the weekend. We'll have to watch where the price of crude is. A lot of stuff to be taken into account, but we generally don't miss on the overall direction of the market. So that's all I have for this post-Thanksgiving wrap-up. Y'all have a great weekend. We'll see you bright and early Monday morning. May all your sports teams win. Basketball is kicking off this weekend, kind of big time. So y'all have fun this weekend. We'll see you bright and early Monday morning.